Hi, welcome to today's training. My name is Justin Wherry. I'm with Multifamily Geeks in conjunction with Sower Investments. And today what we're going to be talking about is multifamily vocabulary. These are some of the terms that you're going to encounter when underwriting multifamily property. So without further ado, let's get started. I'm going to pull up the MFG portfolio trainer. And what you'll notice on the MFG portfolio trainer, as I get that open, there are a number of tabs already preloaded for you. On the property one tab, this is the place that you guys are going to be going to input or to read most of the information. You're going to be inputting a lot of the information here on the T12. And we can talk about the T12, what the T12 is, what a T12 is, and what you're going to be doing with this in another video when we start talking about actually underwriting properties. But for today, let's go to the property one tab. All right. And I'm using two screens. You don't have to use two screens. If you do, that's fine. It's just what I'm comfortable with. So you can do all of this on one screen, one computer screen. So on the property one tab, you'll notice that you have all of these different income categories and expense categories, and there's a lot of things going on up here under the date and property name, address. What we are going to do is we're going to talk through some of these things in a little bit more detail. So if you'll scroll down on the property one tab to where it says multifamily vocabulary, this is where we're going to be starting. But we are going to talk a little bit about some of the items that you have here on the property one tab. So let's look at the top. You've got a date cell. If you double click on it, there's a calendar preloaded in there. You can put whatever date it is, and that is going to be something that's going to help whoever's looking at this other than you. You know, so when you finish the underwriting, it's sometimes good to have the date in there. All right. We've also got the property name and address. We like to put that in there. This property's name is Mountainside, and so we would put that here. So we're not going to do that right now. We're just going to talk through some of that stuff. Number of units, and rentable square feet is also in here. So let's start. Let's start at the very top. So if you look over here at B180. Well, in the area of B188, let's just start talking about some of the vocabulary that's already listed there. So the first item that we have is gross potential rent, and that is the maximum rent produced by charging market rent. Okay. When we're underwriting, this is not necessarily the number that we are going to use, but frequently on the T12s, which are T12 is a profit and loss statement that an apartment complex will give when a seller is trying to sell their property. So we're looking at this T12 at their profit and loss statement to try and determine whether or not this property is profitable or it would be good for us to invest in. Gross potential rent sometimes is on the T12. It is listed, but we don't actually use that to place in the property one tab. All right. Next, I want you to go down and look at loss to lease. Loss to lease is the difference between the gross potential rent and the gross scheduled rent. So if a T12 has gross potential rent on there and the loss to lease, but not the gross scheduled rent, and a lot of the times you'll find that you won't see the gross scheduled rent on there. If it has gross potential rent and the loss to lease, you just subtract the loss to lease, and that will give you the scheduled rent. And that is what you're going to be putting over here in this D column for your seller's column. Okay. And we'll go over how to do that in the next training. Look down, total rental income. Total rental income is the rent collected after subtracting the physical vacancy, concessions, and bad debt. Okay. So you've got physical vacancy, concessions, bad debt. And we'll talk about what those are a little bit more. But yeah, you subtract these three from your gross scheduled rent and it gives you your total rental income. Your effective gross rent is the amount of rent after adding other income to the total rental income. So you've got your total rental income here. You've got utility reimbursement and other income that you add to the total rental income, and that gives you your effective gross. So your modified potential rent, this is what we refer to as the last 3 months of rent. That's essentially what this is. So modified gross potential rent is the last 3 months. Okay. Let's see, whisper price. Whisper price is what the projected sale price is. Typically, when you get this from a broker, and I'm not sure at this point if you all will be getting that information from the brokers or we will be getting that information from the brokers. But when it comes from the brokers, it comes in one of two ways, either the price per unit or purchase price. So either way, that can be your whisper price. Strike price and offer price. I'm not sure that we really need to worry that much about these two, because at the time that this video is being made, whatever the price is that the broker is saying they're going to get is what they are going to get. Yeah, there's really not a whole lot of wiggle room in there, but I mean, we could talk about it anyway. The highest price that we can pay and still meet our return requirements would be the strike price. And, very frequently, if we're not within, 10% of whatever they're asking, we're not even going to be looking at it anyway. But strike price and offer price, obviously offer price would be lower than the strike price, just to give you some negotiation room. All right, so let's talk about vacancy. So we're back up here at the income. Sorry about that. Back up here at the income. So vacancy is the number of units remaining unrented. And that's it. It's pretty self-explanatory. Concessions. Concessions are incentives that you give to new tenants to get them to commit to becoming a tenant in your apartment complex. So, you might give them the first month free, or give them a discount on that first month of rent, or something like that. Those are concessions. And so 9 times out of 10, when you see something that is a concession on the profit and loss statement on the T12, it'll jump out at you. You'll know exactly what it is. And sometimes they are even listed with concessions right beside the name. So it make it very obvious as to what it is. All right, next we've got bad debt. So bad debt is essentially exactly what that is. Sometimes the tenant stops paying, and they have no intention of paying. So bad debt is essentially exactly what it sounds like, a bad debt. So if you need some more detail, there's some examples in here, but that's what it is. Let's move on to RUBS. RUBS is actually on the Property One tab. It's listed as utility reimbursement, but that is RUBS. And RUBS basically stands for Resident Utility Billback System. That's where the apartment complex charges the tenant for the utilities instead of the utility company charging the tenant. So that's something that would be another income stream to the apartment complex. And so that's what RUBS is, utility reimbursement. Okay, let's move on to other income. Other income is any source of income other than rent. Put very simply, other income is any source of income other than rent. And, pet rent, things like that, things of that nature. So that's what those things are. Now, remember, again, you're going to be subtracting. We're not really doing any of this math. It's all being done for us. All of the calculations are being done for us. But sometimes it's good to know how things work. In the event that you make a mistake, somehow, then you can kind of look at things and say, okay, yes, this does need to be subtracted. This needs to be added. We'll get into that a little bit later. We'll talk about how that works and how you can find those things when you do have a calculation error or something like that happens. We can figure out quickly where the error is. Okay, let's move on. So next we have property taxes. So property taxes are the taxes assessed on the value of a property. That's really as straightforward as that gets. So there are a couple of things to remember when you're dealing with the taxes. And let's go ahead and talk about that now. So here you'll see in the notes box, it asks the question, did you adjust G22 with the correct property tax mill rate? And did you adjust G23 with the correct property tax percent basis? So let's talk about mill rate and percent basis. And that's these two boxes, by the way. So got mill rate and the tax percent basis. The mill rate for a property is what states and counties will use to calculate property tax liability. And it's also referred to as millage rate. Sometimes you'll see it as property tax rate, so millage tax. But essentially what it is a number that if it's listed as millage rate, you will divide it by 1,000. So it's $1 for every $1,000 of property value. If it's listed as a percent, which is per 100, then you will divide that number, that percentage, by 100 to get the figure that you would put in here at G22. For G23, the tax percent basis, this is essentially the number that the state uses to say how much of the property value will be taxed. So all of these things, both of these things are figures that you can find in the OM. And, if you guys have to find them in the OM, if they're not in the OM, then someone can get that information, or maybe you guys will be getting that information. I'm not exactly sure, but you can get the information from the county tax assessor. So whatever county that property is in, you can find that out and go to the tax assessor's website. And 9 times out of 10, it's very easy to find on the tax assessor's website. And so that's another reason why it's important to put the name, property name, and address, because you will need those things if you're going to find out the millage rate and the tax percent basis. Okay, moving right along. Let's move on to insurance. Insurance is the property insurance for the subject property required by the lender. That's kind of what that is. It's property insurance. On the T12, it will be listed as insurance, and same thing with property tax. And once we get to the expenses part, these are all pretty clear. It's very rare that they're not. Okay. Let's see. Let's move on to payroll. Payroll is the account used to pay employees who work for the property. Now, this is an important distinction that needs to be made. So we've got payroll here, and we also have management. Sometimes those two things can get confused, right? But they're not the same. Okay. Payroll is for the employees that work at the property. Just the simplest way I can put it. Payroll is for the employees that work at the property. Management is for the management company that manages those employees. They may work at the property, they may not. I don't think that they will, but for the management, it is a company that manages the on-site employees. That's an easy way to remember that. Okay, so let's move on to repairs and maintenance. Repairs and maintenance is the name for the costs resulting from ongoing operations, property maintenance. If something needs to get painted, they need new bathroom fixtures or something like that. Yeah, just things like that. So repair and maintenance. And again, this is going to be something that is going to be pretty clearly listed in the profit and loss statement. Make readies. Make readies is for when apartments are being turned over, when you're trying to return a unit to a rentable state for a new tenant. That's what make readies are. Okay. Let's move on to general admin. General admin are office expenses, put very simply. Office expenses, things that you need to run the property from the office. Management, we talked about that. It's usually a third party management company. Sometimes people will be self-managing, so you may not see this in there. But if they do have a management company, the fees for that company will be listed under this. All right. Let's move on to utility. The utility account is for just that, utilities used by tenants. It's common to have like gas, water, electric, trash will be in there. So just for common areas like at the pool or at the barbecue station or the playground, things like that. All right. Let's move on to marketing. So marketing is the expense that you have to promote the property, to advertise to new tenants. It's a very simple way of putting it. Let's see, contract services. Contract service. Now this is also another one that can kind of trip people up sometimes. It shouldn't, but sometimes it can kind of trip you up. Okay. Contract services are third-party vendors, so landscaping, security, pest control, those types of things. Now, if they are listed under contract services, you put them under contract services. However, if pest control, landscaping, or security are listed separately as a separate line item in the T12, you're going to want to list that separately. And if you look over here on the top of the property tab, you have contract services, but you also have separate line items, like separate spaces for pest control, landscaping, security, because sometimes those are listed separately. Okay. And you've also got two other spaces for other expenses that may be coming up. Who knows what they are, but they need to be accounted for. So like let's say that there's, what have I seen? I've seen vehicle expense, something like that. We don't really have a section for vehicle expense, but we do have these two other places. So if it is listed separately, you want to put it separately. Okay. We do need to account for all of those expenses. So we've gone through just about everything. Next, we have occupancy versus vacancy. We're not really going to deal with that as much on the T12s, but it is good to know. So, I mean, if you want to read over that, you can. Next, let's talk about total expenses and net operating income. So for the total expenses, that is all of the things that we just talked about, from property taxes on down through other, added up and totaled. It's exactly how it sounds, right? So the net operating income is the effective gross income minus the total expenses. And I mean, it's really that simple. So we are not going to be responsible for these calculations. However, it is good to know what they are in the event that when you are going through and processing a T12, if a mistake happens, and there's a way for you to know whether a mistake will happen or not, you'll know how to fix it. You'll know where to look to try and solve that issue. Okay. So now that we've talked about that, the other thing that we need to talk about is the cap rate, the area cap rate. And this is basically the percentage that describes the price that things in this area are trading at. Okay. So that's that's essentially everything that we need to know in a nutshell. In the next video, we'll go over this top portion of the Property 1 tab, and we will talk about how to break down a T12.